But I don't think it's totally the tariff announcement. If you look, since July 18th, crude had rallied almost 6%. So there was a lot of new longs in that. Whenever you see a move that's outsized, you have to think that market position plays a part in it. And I know right off the bat, they have to price in what the worst possible scenario is. I heard some analysts saying 250,000 to 500,000 barrels of demand per day could be coming off the market if all these tariffs go into effect. But then today, cooler heads prevail, and you say everything is just a big if. I mean, even Larry Kudlow came out today and said, well, yeah, if they start buying our agriculture, there's room to negotiate. And everybody now today realizes that this may be a negotiating ploy, may not. Yesterday, they had to price for worst case scenario.
But, Jim, today the stock market still seems pretty unhappy by this. I mean, tech is throwing a fit.
To me, that means the stock market break is, obviously a little more convicted. The oil break was just a washout of the positions, and that's why they're bouncing back today. And I still think ultimately it's a demand story more than anything, and the demand here is fine. Global demand has been slowing down a bit, and that's worrisome. But like I said, I think it was more market position and a bunch of weak longs getting thrown out.
When you're talking about oil yesterday, saying that break was a washout, does it set us up for going lower from here in terms of the trading levels?
I think medium and longer term, I think we're heading lower. If you look at the long-term chart, crude has been relatively well behaved and is somewhat in the middle of the range. I think now we can recoup on the short term back up to 58, particularly if we close above 56. But I think ultimately we're going back down to 50 in the medium term, which is an area of a lot of significance going back several years.